Hi guys, today in this video I'm going to show you how just trading one or two double tops or double bottoms per day can enable you to be a successful trader, can enable you to trade for a living. The double top, double bottom trading chart pattern is one of the traditional chart patterns. It's not the only chart pattern that I trade, but it is one that I trade on a regular basis. And if you just concentrate on what you know in whatever profession it is that you do, then you're going to get good at it. And getting good at identifying and trading double tops and double bottoms is something that can really help you trading. And it could be that actually they are the only trades that you take, and you could do whatever you want to do in life with the income, the capital that you can generate from trading these particular chart patterns. Now, they do not work every single time. You can't expect 100% success rate in trading any chart pattern, trading any candlestick pattern, trading in any fashion. You just can't expect that. It's got a hit rate, it's got a win rate, it's got a loss rate associated with the pattern, but identifying them in a consistent manner will enable you to judge the profitability of the pattern, the trades that you're taking over a series of trades, and it's really going to help you advance your trading. So I'm going to talk you through the trade that I took this morning, and we're using the 1 minute time frame on the DAX, the German stock index, or Germany 30, as it's a futures index, and I've been spread betting this morning based on that particular market. So I'm going to talk you through what I saw in the market and the trade that I took. And if you've got any comments, if you've got any questions, please leave them below. I'll come back and answer them later. Enjoy. So then, this is what I saw on my screen just after 8 o'clock this morning. You can see on the right hand side I've got the candlestick chart, and on the left hand side I've got the line chart. So different ways of interpreting the buying and the selling that's going on the 1 minute DAX time frame. See the 1 minute time frame here, and so you can see that the market has been moving up pre-market. It's been a fairly steady incline, and you can clearly see that the lows and the highs are getting higher over the half an hour preceding the open. And so coming into the open here, you can see the increase in the size of the candlesticks as the open approaches, and as we hit the open you can see that there's a lot of activity going on, and so that's what you'd expect. And so the market does take a little bit of time to calm down once it's opened very often, and so I play a bit of a waiting game to start off with. Play a little bit of a waiting game, just wait and see what happens as the action unfurls in the early part of trading. And so I'm looking at, what's the market telling me? Who's got the edge? Is it the buyers or the sellers that have got the strength overall? And approaching the market this morning, over the last few weeks, the market has been gradually rising. So with strength over time, with the market gradually rising over the last few weeks, and with strength over the pre-market phase of price action, then my thoughts are moving towards what sort of candlestick patterns do I get that tell me I can take a long trade and buy, and what evidence have I got for that. So you have to wait to see your evidence appear on the screen. I might have in my mind that I want to take a long trade, but as it stands at the moment, am I going to go long right here? Am I going to go long here? This is a big red bearish candlestick. Am I going to go long here? Well, not with the particular strategy I'm running. I'm looking for evidence. So I'm looking for context, content, and confluence for my trades. I'm looking for the right candlestick patterns. I'm looking for them to appear at the right part of the chart. And I'm looking for evidence that two or more things are saying the same thing at the same time and that my ducks are lining up. So I've got to do the duck test before I take any trades. And so let's just move this out of the way. As the open developed, you can see that there was a big bear run here. Big bear run. You've got 1, 2, 3 candlesticks, red candlesticks on the trot. 1, 2, 3, 4 red candlesticks on the trot. And the market came down to the pre-market lows here. So, I'm looking out primarily for, what's telling me that the market's moving in either direction. And so as we're moving through the open, you can expect the market to go up and go down as the bears and the bulls make their mark. And so what can we see within the candlesticks that gives us an indication of buying or selling pressure in the market? Well, there's 1, 2, 3, 4, 5, 6 out of 7 green candlesticks there. There's 1, 2, 3, 4, 5, 6 green candlesticks on the trot, followed by 3 red, 1, 2 green, followed by a series of red that takes us down to the pre-market lows here. And then we have buying. So we have buying. I'm not in a trade at this stage. I'm just watching. I'm watching, being patient. I need to see something in the chart that tallies with my strategy. So just seeing red and green candlesticks, that's not a strategy. I can't take a trade based on that. I need to see evidence. So the market goes up, 1, 2, 3 green bars, followed by a red pullback bar and a big green candlestick bar here. So still, it's going up, it's going down. And what have we got in terms of where the chart is? Well, we've got a series of highs here, followed by this high here. This is a lower high, so this is a higher high, lower high. That's a low, lower low. Does that mean the market's moving down? Well, no, it's in a trading range here. The market's going up and it's going down, and it's not really doing a fat lot, to be honest with you. And so we've got some EMAs drawn on here. I always have the EMAs drawn on my charts. I use them for confluence. The green is the 6 EMA and the red is the 20 EMA. If you 21, 25 EMA, the 6, the 8 EMA, there's not a lot of difference between those. But, where is price spending its time? Well, it's above the 8, it's above the 20 EMAs, all through this area here. It's above both EMAs here. Spends a bit of time coming down below the EMAs. You get a low here. Goes up. A higher low here. Am I entering at this stage here? No, not based on this, because there's been a big run of red candlesticks here. And, I'm a bit nervous that the market might decide to come down a little bit further, so I'm not going to take a long trade yet. However, this was a big green candlestick. So, I actually took my trade here. I went long here. And so prior to that, what have we got? Which is the biggest candlestick on the chart prior to this price action here? Which is the biggest candlestick on the chart? It's that one, isn't it? This is a big green candlestick closing near its high, powering up from the low here, and that's a sign of buying strength. That tells me that the buyers didn't want the market to go down to this level. They bought here, and if it comes down to this sort of area again, this sort of level, then they're going to be buying again, and that's a sign of buying strength. And so we're looking for evidence that that's going to happen. So the market goes up, reaches these highs here and rejects down, and gives us an opportunity to see whether we're going to be right. So the market tries to go below and does close below the EMAs here, and it puts in a low, a high, and this is an identical low, so we call it a higher low. And this is based on the spikes, the actual lows of the bars, of the candlestick bars. Here, these are closed lows, and that's a low, a high, a higher low. That's marginally higher. This one's marginally higher than that, and that's a good sign for the bulls. So you can see there's a pin bar here, a doji bar here. That's, when you see these spikes at the bottom at the same level as this spike here, you can tell that the buyers are stepping in just when we thought they would, and that puts me on alert for, am I going to be right about this trade? What do? Do I wait for it to come up to this level and then buy? Well, I didn't. I waited for it to break this high here. So you've got a low, a higher low, and you've got big buying pressure within here. And as soon as this bar goes above the high of the middle of the double bottom, this is the first low, this is the second low, the double bottom pattern, then we're in a long trade. So we're going long on this bar here. We're going long, and we're looking for at least 1-to-1. Now my risk is below this low here, so I'm putting my protective stop in here, and we're looking for at least 1-to-1. Now, in the back of my mind, I'm thinking, okay, what have we got here? Well, we've got a potential high here, and a potential that would leave me with 1-to-1 risk to reward, with my risk down here, at least 1-to-1. You take the fee into consideration. These are 10-point gaps. And so we're looking at about 7-point risk. Well, 7-point gain less the fees, not a lot. And based on the fact that I'm thinking the market's gradually moving upwards, it's worthwhile seeing whether we get a break of these highs here. The buying pressure should force things higher. And so I'm looking for more than 1-to-1 risk to reward. And so I'm looking for, when I'm in this trade here, you get a big green burst out, breakout bar up to the highs here. 2 small red bars in reply. So we've got initiation. This is the breakout bar here, breakout above this high. And initiation, reply. The reply is weaker than the initiation move, the initial move out of this area here. And you get another bar here that closes just about at these highs. A weak reply bar here. No reason to exit at this stage here. No reason at all. If the market comes down here, then, bulls are going to buy again. That's my thinking. And if the market does come down to this level, then I get stopped out and I have a loss. So what? It's only one trade. It's only one trade. And as it happens, it was my only trade of the morning. But, there's a win percentage, there's a loss percentage on these type of trades. And sometimes you win, sometimes you lose. But more often than not, with these type of trades, double tops, double bottoms, in this particular format, I can make it work for me. And therefore, I'm going to be prepared to accept a loss if it happens, even when I've got 1-to-1 risk to reward, because I know that based on this analysis, high, higher high, higher high, low, higher low, the market's gradually moving higher, and you should get a breakout above these levels here. Now, interesting round number on the chart here, 11,600. The market's kind of been stalling around that level here. So, yeah, I am on alert for that level, but just because it reaches that level, I'm not going to take my profit, because based on what I can see here, we're going to get a breakout above it, and that's exactly what happened. So the market pulled back very slightly here and then zoomed off again above the round number level. No reason to exit. You got a bull bar, green bar, followed by a red bar, which was the body of the red bar was weaker. No reason to exit the trade here. Keep in the trade, stay in the trade until you get evidence. And the market came up. Another series of green bars, 1, 2, 3, and 1, 2, 3, and then we got a mini double top here. Market pushed up, left a spike, pushed up, left a spike, 2 small bars, 2 pin bars, and we're already at, what are we looking at here? We stop down here, entry here. You've got 1, 2, 3, 4, 5, 6, 6.5 to 1. Reward to risk, 6.5 to 1. Reward to risk. That's a good trade. And so, yeah, 1 pin bar, 2 pin bars. I'm out. That's where I take my profit. And so that's a good morning's work, isn't it? A good morning's work, and you've got to have a lot of losses to take away that reward to risk gain. So 1 chart pattern, a double bottom chart pattern, 1 trade, and it doesn't, you need to be judging the amount, the position size, the amount you risk per trade based on your success history to date. And when you become a successful trader, then you gradually increase your position size over time. And so that was my trade of the day, my only trade of the day. I'm done now. If you've seen my series, Habits of Successful Traders, then the last video that I put on was to do with enjoying life and having things that are in your life that are outside of trading. I enjoy trading, but it's not all my life, and therefore I'm off to enjoy the rest of it. So my best wishes to all of you. I hope you're having a great trading week. I hope that you found that useful. That's how to trade double bottoms on the 1 minute time frame, and using the line chart analysis, using candlestick analysis. And so we had a double bottom here. This was our, this is in a good context area. So you've got content, confluence, you've got a pin bar in here, you've got context, content, and confluence. All the ducks are lined up for this particular trade. And if double bottoms are the type of trades that you take, then you have to take the trade if you're a trader, which is what we did. And it was successful. So a great morning's work. I hope you found this useful. Any questions, any comments, then please leave them below, and more on the next video. Thanks for joining me. My name's Anthony Beardsall. Join us at the Excellence Assured Trading Academy for more videos, more tuition, and trading strategies that I use successfully to trade the various markets. I trade every chart in the same way, whether it's a 1, 2, 3, 5 minute, 1 hour or daily chart, whether it's the DAX, the FTSE, whether it's, any of the Forex markets. They're all traded the same by my strategies, which I share in our trading courses. So join us at the Excellence Assured Trading Academy for more. And I'll see you on the next video. Bye for now.